Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. The markets were rattled on Tuesday after a prominent voting member of the US Federal Open Market Committee, or the FOMC, caused a stir and boosted the US dollar. As traders returned following a 3-day holiday weekend in the US as the market was closed on Monday in observance for Martin Luther King Jr. Day. Speaking from the Brookings Institution, US Federal Reserve Governor Christopher Waller stated that the US Central Bank should be able to reduce interest rates in 2024, but did not specify the time. He did also knock back any potential rate cuts seen in March. Still, the markets were rattled and the dollar index did rally on to 103.20. Looking at the technicals, we can see that the Australian dollar has tumbled now and pressuring the key area, which is at 65.6080, also seen as the 60-day moving average. If we do see a break beneath there, that would give some concern and stop losses to be triggered down towards 65.10. But overall, I feel that the market may be getting a little bit to the lower side of this oversold condition and therefore could see some demand coming back in, as we saw back in early December when the trend was established. Let's see how this level plays out. It is a key point, and I do anticipate at least a round of demand returning and see if we can get a bounce. Looking to the euro, the market is now pressuring this uptrend, which is seen around 108.35.45. In light of the pound, we are oversold. I'm not fully convinced that the dollar can sustain above 103, and I just feel it's a bit of a scare tactic that the markets are playing at the moment in strengthening the dollar as we are heading, or at least waiting for further indication in terms of data to support a rate cut decision. But with the Fed officials speaking, they have rattled the market, and therefore let's see if this broad trend can hold. Also this week, we've got the European Central Bank, for the ECB, President Christine Lagarde, when she hosts the World Economic Forum in Switzerland. If we do see a bounce, then the market should look back towards the region of 109.5 to 110. As we can see here, dollar yen has also strengthened, or more to the point, yen's weakened and the dollar strengthened, that is. And as we now see, there's a bit of divergence as we're heading now towards this level, seen around 147.35.50. I do anticipate that the market will struggle soon and maybe even find this level a little bit tough to crack, and therefore see a pullback to 146.60 or down to 145.80 and reassess. As the market now waits for the Bank of England Governor Andrew Bailey to give his testimony, eyes look towards this key level, or support that is, at 126.10.15. Like previously seen all the way back to early December, bulls were defending and should again do so, then therefore could see a bounce back towards 126.80 and 127.55, and the broad case to the top side at 128.30. Gold was also a little bit weaker, losing its shine as it drops now back towards the key support level, which is roughly around the region of 2022 to 23. Let's see if the market can stage a bounce from there, and if so, should retest the topside level, which was around 2054 to 56 yesterday, which did struggle on supply coming in. So if we do see a break of 2022, stops it will be triggered likely to 2010-11, where I feel the market may stage a stronger bounce. Wrapping up with oil, well, the market's finding a little bit of mixed play due to the dollar index bouncing. But overall, though, we're still locked in this confined range of 68.5 to 75.5. And as we whipsawed in and out of this range, we should eventually see the market claim the top side, 75.5, and therefore any pullbacks to be temporary. Well, that's a wrap. Thank you for joining me. And as always, look out for the interest rate report, and I hope you enjoy the rest of the day.